Hello everyone, in this video we're gonna go over on-chain metrics to figure out what's the short-term trend for Bitcoin prices. This is not financial advice and things can change because of different events, but let's take a look at some metrics. First, let's recap what happened. Elon Musk first tweeted out that they will stop accepting Bitcoin to buy Tesla cars, and the reason was because it used too much energy. The price of Bitcoin was dumped then, and then China announced that they will start cracking down Bitcoin mining. That exerted even more force into Bitcoin, wiping out a lot of leverage buying, bringing down the price from $60,000 to around $30,000 to $35K. So let's take a look at on-chain metrics. First of all, a lot of the selling of Bitcoin was done by people that bought Bitcoin in the past month to 3 months old. So these are short-term holders that sold a lot of coins in the past week and two. But on the opposite side, long-term holders were adding more and more positions as the price of Bitcoin went down. This chart compares short-term holder supply to long-term holder supply. As you can see, between November and April, there was an accumulation of short-term holders. But in the past 2 weeks, long-term holders have been adding their position and short-term holders have been selling their position. What about miners? Miners for a long time have been stacking up and adding their position in Bitcoin, but in the past 2 weeks, their position has stalled out. That means it has plateaued. And this might be due to China crackdown into Bitcoin mining. As you can see in this graph, the second biggest mining pool, called pooling, has sold a lot of Bitcoins. And that's the part of the story of China cracking down into Bitcoin and Bitcoin mining. In this graph, we can see the exchange flows. Whenever Bitcoin is added to exchanges, we have a bearish factor because people are selling their Bitcoins and vice versa. As you can see in this graph, the exchange flow has now stalled out, meaning people will stop selling their Bitcoins right now overall. Even though exchange flows have increased in the past week, as you can see in this graph, there was a difference between exchanges in Asia and in the West, and that might be because of the Chinese crackdown. At the same time, long-term holders have been accumulating, which is a great sign. And another bullish factor is that there are a lot of stablecoins in the market. As you can see in this graph that measures the Bitcoin market cap over stablecoin market cap is at very low, meaning there are a lot of stablecoins and firepower. If the price starts moving, people can start buying a lot of Bitcoin. What about institutional demand? There are two main drivers of institutional demand, and that's the Grayscale ETF and the Purpose ETF. In the past month, there was some selling of ETFs and outflow of Bitcoin, but now we can see there is now again an inflow of companies buying Bitcoin. It's also worth mentioning that the timescale of institutions is much longer than the timescale for retail. So that means that when they buy, they hold for much longer. Now let's take a look at the market and the bidders and sellers. So it seems that there are a lot of buyers at $33,000 mark and a lot of sellers at $40,000. So if Bitcoin prices go above $40,000 or below $33,000, that means that there will be a big jump and a big spike up or down. So we'll see what happens in the next 2 weeks. But overall, in the long term, there are two bullish signs for Bitcoin. One of them is that more and more Bitcoin has become illiquid, meaning people are holding more and more Bitcoin. 76% of all the Bitcoins are illiquid, and that has only increased over time. And also more and more people have been stacking Bitcoin. That means the supply is decreasing and demand is increasing. That means in the long term, Bitcoin prices will probably go up. I hope you like this video. If you have any questions, leave down below. I hope you have a great day. See ya!